While you were being told the Ponzi was collapsing, the death spiral was imminent, and 40K was next, whales were buying 270,000 Bitcoin, the biggest 30-day accumulation in Bitcoin's history. And in the last 48 hours, the reversal started. Kevin Warsh blinked on inflation. Over $1 trillion poured into hard assets in 6 hours. Bitcoin took back 60K, and Strategy, the company at the center of the collapse story, rips 23% in 5 days. So today, we follow the money. Who shook you out? Who was buying? The playbook written 100 years ago that explains the whole thing almost line for line. And the question hanging over all of it, is this reversal real, or is it one last trap before new lows? This is Truth Block. I'm Hurley. Let's mine truth. Real quick before we get into it, most of you watching still are not subscribed. If this show helps you keep your head while everybody around you is losing theirs, hit subscribe to Simply Bitcoin. It's free and it supports the peaceful Bitcoin revolution. All right, let's rewind to Monday because I want you to remember exactly how it felt. We've had sentiment at levels we haven't seen since the FTX collapse. Bitcoin under the 200-week moving average. The first weekly close below the power law floor in its entire history. Benjamin Cowan is taking victory laps on the 4-year cycle, and every chart account on the planet was posting a roadmap to 40K or lower. That was the mood going into this week. Then the week actually happened. Tuesday at the Central Banking Forum in Sintra, Kevin Warsh stood up and said inflation risks have come down. He still says prices are too high. He still refuses to give forward guidance. But that didn't matter. The market heard the blink. Gold jumped 3.7% and took back 4,100. Silver ripped 6%. Somewhere around 1.25 trillion flowed into precious metals in a few hours. Then the next morning, the jobs report landed. 57,000 jobs against 115,000 expected. And they quietly revised another 74,000 out of April and May. The rate hike conversation was dead by 9 a.m., and metals added another 570 billion in 7 minutes. And behind it all, US M2 just hit a new record, 23.1 trillion. Now catch the irony here. In January, the mere announcement of Kevin Warsh as the next Fed chair crushed gold and silver. His name alone birthed people saying the debasement trade is dead. Fast forward 6 months later, in his own mouth brings it back from the dead. The truth is, the debasement trade never died. A narrative just repriced it. And narratives, as we're about to see, are exactly how people get shaken out of positions. But first, I want you to hear something. Because a man sat down on this very channel days before Warsh opened his mouth and gamed out exactly what was about to happen. Larry Lepard, a fund manager and the author of The Big Print, who has decades in markets, a gold guy long before he was a Bitcoin guy. Nico asked him about the bear market, and listen to what he front ran.
And the world is thinking that Warsh is a hawk. I mean, I'll tell you one thing that could really change the world. I'm not predicting this is going to happen. Okay, it probably won't. But what if, the next Fed meeting came along and Warsh said, you know what, we've redefined the inflation numbers. They're backward looking anyway. Things are coming down because the war has been settled. We think there's a lot of AI productivity, and this is a new day at the Fed. We're looking through the numbers, and we believe in, it's really not, we can't backward look. We got to forward look, and we're going to get a lot of productivity. And therefore, we're in a position to cut interest rates, and we're going to cut rates at this meeting. If that happened, okay, just hypothetically, if that were to happen, you know what would happen to silver and gold and Bitcoin? I mean, they would explode. I mean, not just a little bit, like a lot, because the entire boat is leaning in the, Warsh is a bulker, Warsh is a hawk, higher rates are coming, you don't need any kind of sound money. And, and if he were to reverse and prove that that's not the case, everyone would go, these sound money guys were right. They can't ever stop printing. I mean, how do we win? We win when our money replaces their money, okay? Their money is evil, corrupt, planned by a bunch of central planners, and they lie to us 24/7, okay? We win when our money is better than their money, and everyone knows it, and their money can't exist anymore, and everyone walks away from them because we know they're liars. I mean, it's, and so that has to happen to the Fed. That everyone has to get to the stage where it's like, these guys can't stop printing. They're just never going to stop printing. They're always going to print more. I need to get out of here. This is a burning house. I got to get out of here. Give me some gold. Give me some silver. Give me some Bitcoin. That's going to happen. That day is coming.
Lepard laid that out as a hypothetical. Days later, Warsh delivered the soft version of that exact script. and $1 trillion moved in 6 hours. Now keep in mind this was just a hint from Warsh. If a hint moves $1 trillion in 6 hours, what does the actual admission do? But hold on to that thought, because before you can ride what's coming, you need to understand what just happened. The crash you lived through over the last few months followed a script that was written over 100 years ago. And that shakeout is exactly why I want to mention Ledn for a second, because the people who get destroyed in a shakeout are the ones who had to sell. The tax bill lands, the roof leaks, life happens, and they're dumping coins at 58K that they stacked at 80K. With Ledn, you borrow dollars against your Bitcoin instead of selling it. Your collateral stays custodied. It never gets loaned out to somebody else. Ledn has done over $10 billion in loans across 8 years, and every cycle in between. If you never want to be the forced seller at the bottom, visit learn.ledn.io/simply and check your rate. All right, now back to the playbook. His name was Richard Wyckoff, a trader and teacher in the early 1900s who spent his career studying how the biggest operators of his era actually moved markets. And he noticed the same sequence over and over. The big players let a market build a floor, then they break it on purpose. Price knifes below the level everybody's watching, the stops trigger, the models fail, the headlines scream, and retail hands over its positions in a panic. He called that move the spring, and then the market turns and never looks back. Wyckoff wrote down the purpose of the spring in one sentence. He writes, quote, "This action allows large interests to mislead the public about the future trend direction and to acquire additional shares at bargain prices." That's the whole playbook. Now, I can't prove anybody coordinated the last 60 days, but I don't need to. A pattern this old just needs big money doing what big money does when small money panics. So instead of intent, check the footprints. In March 2020, whales bought 150,000 Bitcoin into the COVID crash. Everyone called them insane. Bitcoin did 18x. November 2022, whales bought 180,000 into the FTX collapse. 10K targets were everywhere. Bitcoin went 7x. In the last 30 days, 270,000 Bitcoin, bought around $59,000, while your timeline debates whether we're going to 30K. This was the biggest whale accumulation ever recorded. On top of that, large entities are net long Bitcoin at the highest level in history, and long-term holder supply just hit an all-time high. The people who know this asset best are refusing to hand their coins over. And here's the one that gets me. Only 45% of Bitcoin supply is in profit. The last time it read that low was November 13th, 2022, the exact bottom of the FTX collapse. From that day, Bitcoin went 1.3x in 3 months, 2.2x in a year, and 5.5x in 2. Everybody said it. I wish I'd bought it 16K in 2022. In 2022, they said it about 2018. And in 2018, they said it about 2014. It just never feels true in the moment, because in the moment, the fear is louder than the data. Which brings us to this cycle's fear story, because every spring needs one. This time, it was Saylor, the death spiral, the Ponzi unwinding, the forced liquidation that was always days away. We've done the balance sheet work across a few episodes, so I'll just show you what happened the moment the pressure let off. Strategy ripped 23% in the last 5 days and took back $100. MNAV is back over 1.1. STRC is inching its way back up towards par, now around $90. The company's dollar reserve sits at roughly 18 months of dividend coverage. And BitPain flipped this whole story on its head this week. MSTR trades $3 to $4 billion a day. At 0.1% of that volume, the company can raise 30 to 40 million every single day without denting the price. And volume spikes and panics. The panic that was supposed to kill the company is the company's money printer. Bear markets actually feed the machine. Wyckoff would recognize this market in about 5 minutes. Which leaves us with the real question. All that money that got shaken out of Bitcoin, where did it actually go? Before we follow it, one more thing. Because there was a second shakeout this cycle that had nothing to do with the price. Some of you got shaken out by your own setup. We're all scared of losing a seed phrase, and the hardware fights you every step of the way, which is exactly why this episode is brought to you by Bitkey. Bitkey is self-custody built for real life, and I love mine personally because it takes a real multi-sig setup, the thing that scares most people off, and makes it dead simple. There's no seed phrase to lose in the first place. Recovery and inheritance come built in from day one, and the new device even has a screen now, so you can see exactly what you're approving on the device itself instead of taking your phone's word for it. The whole thing is built for peace of mind. So go to bitkey.world/truth and you'll get 10% off the new Bitkey. All right, let's follow the money. If you've been with us this year, you already know where it went. the AI black hole. We've tracked it all year. The capital vacuum and the great capital rotation thesis. What's new this week is the other side of the trade, because the man who bought 175,000 Bitcoin into this bear market, roughly 1 out of every 5 coins purchased in 2026, just put a timeline on when the gravity flips. Here's Saylor on the New Era Finance podcast.
So what you have is a AI-driven black hole. It's orbiting through the capital solar system, massive gravitational pull. It's pulling credit money. It's pulling equity money. It turns out that it has pulled 10, 15, 20 billion dollars of capital out of the crypto economy. You know, institutional investors have sold 5 to 10 billion dollars of ETFs and things like that. So it's pulling some capital, but of course, Bitcoin is not funding all of this. Bitcoin is like 2% or 3% of the capital. That capital is being pulled into these hot deals. Every banker on Wall Street is out marketing the SpaceX deal, marketing the Anthropic deal. And so then the capital investors think, well, I'll take my mature money that's been invested in the same business idea for 3 years, 5 years. Let's roll it into this hot new deal. Let's get in on it. I know I'm going to get a 10 or 20% pop because the bankers, you know, if they're going to do the deal, they're going to have to make the deal pop 10 or 20%. So I'm going to get in on the deal and then I'll get out again. And so I think capital is being pulled into all these hot deals. They're all competing for capital. When we get through, you know, IPO summer or AI summer, I think a lot of that hot money will come back into Bitcoin because Bitcoin is now undervalued. It's, if you want to look at Bitcoin, you can look at the premium or discount to the 200-week moving average, which is kind of like the book value of Bitcoin, or you look at the realized price, and what you can see is when the market's hot, it trades at 100% to 200% premium. And then when the market chills and the leverage comes out, it trades at that number or maybe at a slight discount. And so what you're seeing right now is this capital cycle. The more Bitcoin, you know, has capital drain out of it, the more compelling the price is, the better the value. At some point, those capital investors, they're not maximalist in anything. They're not religious ideologues. They can be excited about this deal this week. They'll be excited about another asset next week. And they're all looking at relative value. So I think that equity markets have been performing well because they've been juiced by NVIDIA and Google and some of the AI story. And Bitcoin hasn't been getting that lift. But I think that after these deals flow and after capital settles, I think that a lot of the capital will flow back into the Bitcoin and Bitcoin-related securities. You know, probably the third quarter, and I think by the fourth quarter, things will be normalizing to our benefit.
And if you want to know who's standing on the other side of those hot IPO deals, who actually wins the round trip, Jeff Booth answered it bluntly this week on the Robin Sear podcast.
Retail is going to invest in the SpaceX IPO, take money from Bitcoin to do it, move Bitcoin to SpaceX, get flushed out. Well, the insiders of the SpaceX IPO are going to buy Bitcoin. And so these things continue to happen. These hype cycles continue to happen. And if you're just focused on long term and building real value, then it plays out over long term.
Do you see this as a reason that we also, like I mean, there's so many reasons why markets move, but is that one of the reasons why Bitcoin has less liquidity and has less, we're not at 80, 90, 100K.
Yeah, again, I don't measure it in price.
Yeah.
Like this, I just, but if I measure it in price and I looked at the value of this SpaceX IPO, then wouldn't I have to measure that in price too? I think they lost $40 billion last quarter. Have you ever had an IPO at that type of valuation that's lost that much money, right? So, and will continue to lose that much money under belief. So how long can it do that? Until, as long as people believe that that's the real value, and so these things move in waves. And again, if you look at the coordinated media, and what happened to drive that valuation, where where Fidelity changed the $500,000 minimum to $2,000 to get retail to invest, where the ratings, where the agencies and everything else said that the pension funds have to hold it in their index. Essentially, it's a giant sucking sound from retail into this thing, because somebody has more control of the planet resources today, and can drive this into a story to drive more money into it. So of course that's going to play on everyone's psyche, and they're going to be wanting to be part of the next great thing. Tons of people do it, and they're going to get flushed out twice. They're going to invest at the high here and lose their Bitcoin. Well, it ports back the other way.
So retail sells its Bitcoin near the low to buy the IPO near the high. The insiders selling that IPO at the high turn around and buy Bitcoin near the low. Same coins, same dollars, opposite direction. It's Wyckoff's spring running at civilizational scale. And this time, the spring came with a marketing budget. So now line up the two clocks, because this is where the next 12 to 18 months comes into focus. Clock number 1 is the Fed. Jobs are rolling over, interest on the debt has passed $1.3 trillion a year, there's an election in November, and the chair flinched at the very first soft inflation read. The admission Lepard described, the moment everyone realizes they can never stop printing, that's coming. The only debate is which meeting. Clock number 2 is the AI trade. The IPO calendar that's been vacuuming capital out of Bitcoin empties out over the next couple of quarters. SpaceX is done, the rest are lining up, and then they're through. When the gravity fades, that capital goes hunting for whatever's scarce and underpriced. The insiders are already showing you where they'll look. And these clocks actually wind each other. Easier money speeds up the rotation. The rotation front runs the easier money. When they land together, and they're pointed at the same window, that's the setup for a monster move. So the question you actually came here for, is the bottom in, and has this rotation begun? I don't know. Nobody knows. We could still get one more capitulation wick into the low 50s, maybe the high 40s, before this thing turns for good. Or 58K in the Saylor death spiral narrative was the bottom, and we never see it again. I'm not going to pretend I can call which one. But here's what I can tell you. Bitcoin is trading below its 200-week moving average right now. In its entire history, it has spent only a few short windows down here. 2015, the end of 2018, the COVID crash in 2020, and the FTX bottom in 2022. Roughly once every 4 to 5 years, the door opens, usually for a few days or weeks, and then it slams shut for years. Every person who has ever bought below the 200-week and simply held has won. Every single time. The whales buying 270,000 coins didn't wait to find the perfect wick, because they knew that from 18 months out, the difference between 58K and 52K is a rounding error. Timing the spring was never the game. Their game is making sure that when the market turns, the coins are sitting in their hands instead of yours. Whether they get away with that or not is up to you. And that comes down to whether your conviction can actually survive this type of market. The last 60 days tested everybody, and the people who came through all had one thing in common. Their setup let them hold. Keys they controlled, a plan for their family, nothing sitting where a panic or a platform could take it. And that's what the Bitcoin way builds for you. One-on-one. Real humans walk you through self-custody, security, and inheritance at whatever pace you're comfortable with. So go to thebitcoinway.com/Hurley and book a free 30-minute consultation today. If this episode made you check where your coins actually live, that's your next step. All right, let's bring this one home. Wyckoff said the spring exists to mislead the public about the future trend direction. So zoom all the way out and ask the only question that matters. What is the future trend direction? Well, since the year 2000, the yen has been diluted 2.1x, the euro 4x, the pound 4.1x, the dollar 4.9x, the yuan 29x. Every saver on earth got the same deal. Hold the money, lose 52 to 97% of it. Nobody voted on that. And the asset everyone is calling dead this month, sitting at 58K in the depths of a bear market, is a 59 million X move against currencies that were busy dividing themselves by 5. M2 money supply just made a new all-time high with a supposedly hawkish Fed chair in the seat. The direction was never in doubt. It was never even the question. The only thing this shakeout decided is who's holding the asset when the trend resumes. That's all a shakeout is. A transfer of seats before the train leaves. These prices below the 200-week, under the 4-year average, where Bitcoin has spent 7% of its existence, are the exact prices people in 2029 will swear they would have backed up the truck for. The whales have already backed up theirs. Will you? So 3 questions for you, and be real with me in the comments. Did the last 60 days shake you out? Or were you buying this spring? Is the bottom in at 58K? Or will we see one more wick lower first? Give me your number. If you enjoyed this one, do me a favor and like the video, share it with a friend who panic sold last week, and subscribe to Simply Bitcoin for high signal Bitcoin content every single day. Thanks for watching. Happy Independence Day, and I'll see you next week.